talk about any project in the UAE, you first need to understand how the UAE market actually works. Because when people hear Dubai, they think the entire country is Dubai. But that's not true. Dubai is just one emirate inside the United Arab Emirates. UAE consists of 7 emirates: Abu Dhabi, the capital of the UAE, Dubai, the business and tourism hub, Ras Al Khaimah, Sharjah, Ajman, Fujairah, and Al Quwain. Think of it like states within a country. Today, most international investors know Dubai, but the UAE's next growth story is being built around Abu Dhabi and Ras Al Khaimah. So why are investors from India, UK, Europe, Russia, China and Africa moving capital into the UAE? The answer is simple: safety, tax advantages, world-class infrastructure, global connectivity. The UAE has become one of the preferred destinations for global wealth migration. In fact, recent studies ranked the UAE as the toppest real estate investment destinations in the world, ahead of many traditional markets. And unlike many countries, the UAE does not charge personal income tax on salaries. One of the biggest reasons investors love the UAE is its tax-friendly environment. Let's clear up a common misconception. People say the UAE is completely tax-free. That's not entirely accurate. There is no personal income tax, no tax on salary, no capital gains tax for individuals, no inheritance tax. However, the UAE does have 5% VAT on most goods and services, certain government fees, property registration charges. But compared to many countries where investors pay 20%, 30% or even 40% taxes, the UAE remains extremely attractive. Many investors ask, should I invest in Dubai or Ras Al Khaimah? The answer is interesting. From a taxation perspective, both operate under the same UAE federal tax framework. There is no personal income tax in either Dubai or Ras Al Khaimah. The difference is not taxation. The difference is growth stage. Dubai is the established global city. Ras Al Khaimah is the emerging growth market. Now let's understand the most important concept in UAE real estate: off-plan. An off-plan property means buying directly from the developer before construction is completed. You are essentially investing early. Instead of paying 100% today, developers offer payment plans. For example, 20% now, 40% during construction, 40% on completion. This allows investors to enter the market with lower initial capital. There are several reasons investors choose off-plan. Number one, lower entry price. Developers usually launch projects at prices below completed market value. Number two, flexible payment plans. Number three, potential appreciation during construction. If the area develops rapidly, the property may increase in value before handover. That's why many investors target off-plan opportunities in growth locations like Ras Al Khaimah and Abu Dhabi. Now, here is something many people don't know. You don't always have to wait until handover. Let's say you bought a property at AED 1 million. Construction progresses, demand increases. Now, another investor wants that unit. You may be able to sell your booking before completion. This is called off-plan resale or assignment sale. Many investors use this as a strategy to capture appreciation during construction. This is very common in UAE off-plan market. The secondary market is completely different. A secondary market property is already completed. The owner is selling it. You can inspect it, you can rent it immediately, you can generate income from day one. This is why many investors prefer secondary market property. Which one is better? The answer depends on your objective. If you want capital appreciation, future growth, developer payment plans, go for off plan. If you want immediate rental income, lower execution risk, a completed asset, go for secondary market. Both strategies work. The key is choosing the right project in the right location. Now let's compare Dubai and Ras Al Khaimah. Dubai today is a mature global market. It has Burj Khalifa, downtown Dubai, Palm Jumeirah, Dubai Marina, international businesses, global tourism. Dubai offers stability and liquidity. Ras Al Khaimah, on the other hand, is where many investors see the next growth story. Think about Dubai 15 or 20 years ago. That's the opportunity many investors believe they are seeing in Ras Al Khaimah. This is where things become very interesting. The UAE leadership understands a very simple principle. You cannot rely on a single city forever. To attract more global capital, tourism, and investment, multiple growth engines are needed. Dubai is already successful. Abu Dhabi is growing rapidly. And now Ras Al Khaimah is being positioned as a major tourism and investment destination. This is not accidental. This is strategic. A lot of people think the casino project appeared randomly. That's not what happened. The Win Al Marjan Island project is part of a broader strategy to diversify tourism and attract global investors. The UAE created a gaming regulatory framework and awarded the country's first gaming license to the Win. This is not just a casino, it is a multi-billion-dollar integrated resort designed to attract international tourism, hospitality spending, jobs, business activity, and foreign investment. The project is expected to transform Ras Al Khaimah's tourism and real estate landscape. Now, many investors ask, there are wars happening in the different parts of the region. Is the UAE still safe? Has the market broken? The answer is no. And the history gives us the evidence. The UAE has faced multiple global challenges before. The global financial crisis, COVID-19, oil price shocks, regional geopolitical tensions. Yet, every time the UAE adapted, reinvented itself and attracted even more capital. Why? Because investors look for political stability, strong infrastructure, global connectivity, business-friendly policies, and safety. Those fundamentals remain intact. Let's look at real-life examples. During COVID, many global cities struggled. The UAE reopened faster than many competitors. It attracted entrepreneurs, remote workers, and high net worth individuals. Dubai's property market then experienced one of the strongest recoveries globally. Even during recent regional tensions, major developments continued moving forward, including mega projects and large-scale investments. That tells you something important. Long-term investors focus on fundamentals, and the UAE's fundamentals remain strong. And we have another important question. What happens after the peace deal? There is another important factor most investors don't think about: construction costs. When geopolitical tensions arise, global supply chains become more expensive, insurance costs increase, raw material prices can become volatile. Developers have to pay more for steel, aluminium, glass, cement, machinery, and logistics. But when stability returns and trade routes normalize, construction becomes more efficient and predictable. That gives developers more confidence to launch new projects and expand existing developments. Now, here is the interesting part. Even if the construction costs come down, property prices don't necessarily fall. Why? Because demand usually rises much faster. When peace returns, tourism recovers. More flights come in, more visitors arrive, more businesses expand, more investors start traveling to evaluate opportunities. And the UAE benefits directly because it is already established as the region's safest and most business-friendly destination. Think about what happened after COVID. As travel reopened, tourism surged, new residents moved in, businesses relocated, and property demand increased significantly. The same principle applies whenever uncertainty disappears. For Ras Al Khaimah, this effect could be even stronger. The Wind Resort alone is expected to attract millions of visitors annually. Those visitors don't just spend money in the casino, they spend on hotels, restaurants, retail, entertainment, and real estate. That's why investors are not only looking at the resort itself, they are looking at the entire economic ecosystem being built around it. So, if peace and stability strengthen across the region, the UAE could benefit in three ways. First, stronger tourism. Second, increased foreign investment. Third, continued population growth. And when all three happen together, real estate prices historically tend to move upward because demand grows faster than supply. That's why many investors see today's uncertainty as temporary, but the UAE's long-term growth story as permanent. So when you look at the UAE market today, don't just see Dubai. See the bigger picture. Dubai is the established global city. Abu Dhabi is a major economic powerhouse. Ras Al Khaimah is emerging as the next growth engine. Understand off-plan, understand secondary market, understand where infrastructure is going, understand where tourism is going. Because in real estate, fortunes are often made by identifying tomorrow's growth before everybody else sees it. And that's exactly why so many global investors are paying attention to the UAE today.